Hi everyone, welcome to the first episode of our Mentor Masterclass. Today we're going to have in this series we're going to be speaking to a bunch of industry experts, thought leaders, and more importantly mentors who are willing to work with and support entrepreneurs in their journey. Now today for our first episode we have Mr. Chandrashekar Kupperi. Mr. Chandrashekar is the founder of ANOVA, an investment banking and advisory firm. He comes with over 2 decades of experience in renowned multinationals across diversified sectors such as the Lornamead Group, AMP Life Insurance, KPMG, and ExxonMobil, among others. He has led and been part of several acquisitions and divestments, including the 100% divestment of the UK headquartered Lornamead Group. And coming closer to India now, he was involved with the divestment of the Yardley brand to Wipro Consumer Care and the Tura Brand to Godrej Consumer Care. Now, his deep knowledge and expertise in the M&A field has led him to establish his own investment banking and advisory firm, which is ANOVA. And through ANOVA, he works with several entrepreneurs and business owners for their requirements on acquisition of businesses, sale of businesses for strategic reasons, as well as, of course, helping them with their fundraise. Now, in addition to this, he is also an active angel investor. And finally, he is a mentor with us here at Gilda360. Mr. Shekhar, pleasure to have you with us and thank you for joining us.
Hey, sir, thank you so much for the kind introduction. It is my honor and privilege to be here, and thanks to Gilda360 for inviting me here. And a very happy afternoon to all the participants too.
Thank you. It's great. Thank you for making the time. It's a pleasure to have you with us. Now, I've just given a brief introduction about you to everyone, Shekhar. So I'd love it if you can go through your background and your professional journey and experience.
Okay. So my professional journey, now that's interesting because that dates back almost 2 decades ago. My basic qualification is in finance and accounting. I'm a chartered accountant with multiple other professional qualifications, both in finance and management areas. I started my career with ExxonMobil, which is in oil and gas. And after a stint of 4 years with the business, having got fascinated with US GAAP, I chose to move to KPMG. And my last stint as an employee, was with this UK-based multinational called Lornamead Group. And this group owned renowned brands such as Yardley of London, Finnis, and other well-known brands which are very, very popular in respective geographies. The group had almost 40 brands, and I spent close to 10 years with the business. My main role was in mergers and acquisitions, fundraise, restructuring, refinancing. I was also the group finance director, so I had responsibility for the internal controls environment, the financial reporting, the audit, and so on. I must admit, that I had a phenomenal experience. I had a phenomenal exposure, with this group because I met a lot of investment bankers. I met a lot of venture capital firms, private equity firms, as well as the hedge funds. And in the tenure of 10 years, I did almost 11 acquisitions and 4 divestments. And the last transaction I did was selling the group to Li Fung, which is a $1 billion Hong Kong-based group, and that happened in December 2012. Now, Nesar, this is the interesting part. As early as 2011, the entrepreneurial bug, that bit me. And I was chancing opportunities to get into entrepreneurship. And I was super glad, that the sale happened in December 2012. Perfect timing for me. There was a 6 months transition, and ANOVA was effectively born in June 2013. As you rightly said, ANOVA, we are into investment banking, which means we are advisors. We run 2 verticals. One is M&A, which is buy side and sell side, and the other is fundraise. We are completely sector agnostic, and we have completed assignments across various segments such as manufacturing, FMCG, luxury brands, healthcare, hospitality. We have done technology-led, technology-enabled businesses. So that's been our journey. In terms of some of the recent transactions, we did divestment of a corporate service apartment business called Nova Scotia that we sold to Oyo Rooms, and that gave us a lot of visibility in the market. We also completed divestment of a majority stake in Helicor, which is in the auto component segment, and that was bought by Megadyne Group, which is a very, very well-known Italian manufacturing major. In terms of the fundraise, we have done in fintech, we have done in early stage diagnostics, we have done in consumer, we have done in business intelligence, and many more. So it's been 7 years, of ANOVA's journey. And, it's been a varied and a very interesting experience. I mean, both highs and lows. It's not that, no, there's always, the upside. There is also the downside that we have gone through. But the journey has been interesting. And during COVID times, we also, finished a small M&A transaction, which also got announced recently. So that's been a journey so far.
Brilliant, and congratulations, Shekhar, on the recent acquisition. So that, especially during a tough time like this, I think, I mean, hats off to you and the team on that. Now, moving on a little bit to your journey, or to your, I would say, shift into angel investing also in your personal capacity. Can you just walk us through your journey here, and sort of what made you take the plunge into angel investing, and why does startup investing sort of interest you, or what's your interest in this ecosystem as a whole, which prompted you to take this plunge here?
Let me first start in terms of, my timeline when I started. So my first investment happened in December 2017. So we're speaking 2.5 years back. And this was in a health tech. To be precise, it was a healthcare services marketplace platform. And if I have to actually look at the amount, that was, the smallest investment I've made so far. So that was my first investment. Then I got introduced to this platform called OneCrowd in early 2018. And I made 2 direct investments. One was in food and beverages. And the other was very interesting. I made an investment in a clean tech cold chain logistics space. Then in the same year, in the later half, I also became part of the OneCrowd Angel Fund. And now this gets even more interesting because I got exposed to lot many transactions, lot many opportunities via the fund. And that gave me tremendous experiences. And I also started investing via the fund in so many startups. Now in 2019, I did 3 investments. One was in a business intelligence firm. The second was in a non-invasive diagnostics firm. And the third was interesting because this was a business which is in a concierge service provider for divinity. What I'm trying to allude to the various investments is that it's been completely diversified. Now let's take 2020, which is this year. I made 5 investments, and Nesa, you wouldn't believe all these investments are post-COVID. 3 are in food and beverages, but different subsegments. One is in clean tech, and the other is in reg tech. The benefit that I had is, like in the last 12 months, I purposely chose to be part of more platforms. For example, I'm part of Let's Venture Angel Fund. I'm part of Ivy Cap Angel Fund. I'm part of Venture Catalyst. I'm part of Inflection Point Ventures, Chennai Angels. What that has done is, that has given me the length and breadth of understanding, how startups are evolving, what sort of businesses are emerging, what sort of new ideas, creativity. And I think that's fascinating. And currently I have investments in health tech, in food and beverages, in FMCG, in consumer tech, in clean tech, and reg tech. That's been, the sort of investments that I've had.
Interesting. And also interesting that you mentioned that you made an investment in the food industry, especially during COVID, considering they're one of the, of course, the online players may not have taken such a big hit, but the restaurant industry as a whole has really taken a huge hit here. And I think platforms which would support these businesses would be key going forward. So that would be great. And you've made investments in a wide range of sectors, completely agnostic. So I want to hear from you. So what are your thoughts on the early stage startup ecosystem right now, and where do you see it heading in the next 6 to 8 months?
Nesa, that's a very interesting question. The reason being, if you take this calendar year, which is the first quarter of the calendar year, which is Jan, Feb, March. I'm not speaking about the financial year. It's very surprising because the investments that happened in technology-led startups was almost $2.5 billion. OYO raised almost 800 million, and you had FirstCry, which raised almost 300 million, and there were so many others. In fact, the data is fascinating because the $2.5 billion raised in the first quarter was higher than the previous quarter, and was at least 14-15% higher, than the same period last year. So that's, the first 3 months of this year, Jan, Feb, March. And we all know, during the last week or maybe the previous week of March, India started, getting the pressure of COVID. Now let's look at the data which is from Jan to June, which is the 6 months. Now, this is where, the actual impact, the reality sets in. Venture intelligence, when they came up with the report, the data is actually alarming. They are saying, that in the first half of this year, the deal value has come down by 11%. The deal volume has come down by almost 31%. Now, those are, sort of big numbers when you compare to the same 6 months previous year. Now, what is more depressing is this data, which I'm going to tell you now. Traction, which is again a very interesting platform, which monitor a lot of tech startups. They have come up with the data in terms of the fundraise that happened on the seed and the pre-series A. And they came up with a revelation saying that between April to June, which is actually the post-COVID situation, the number of deals that have got funded is hardly 100. And the amount that got funded, hardly $15 million, $50 million. Now, if you take the same period last year, it's interesting. There were 200 deals, that got funded, and the value was almost $150 million. Now, look at, the sort of gap that we are discussing here. What I'm trying to tell you, Nasser, is this. Let's admit that COVID has slowed down the funding zeal and the frenzy in the early stage startup ecosystem. There is no second thought on that. Now, this is just the first part I'm telling you. The second part is interesting and actually quite scary. The second part is this. If you look at the way some of the startups have got funded, you will actually say that there's a funding divide. It's actually an extreme situation. On one hand, you see the startups bagging millions of dollars. And the other hand, you see startups struggling. Which means while on one hand, it's very positive to note that startups are getting funded even millions, it's very sad to note that 40% of the startups and SMEs, they have run out of cash. I'm sure you would have realized that NASSCOM came with a report, actually a survey that they conducted. And the survey is very scary because they are saying that 70% of the startups will run out of money in less than 3 months. So that's absolutely scary. So in summary, what I'm saying is that the funding has been very, very sector specific, and there is clearly a funding divide. That's what I'm seeing in the ecosystem.
True, absolutely. And I think in the NASSCOM report, they mentioned in the next 3 months, like about 70% of startups are going to run out of funding. And it's really sad to see. I mean, especially it's the early stage startups which are being hit. And completely agree with you on the skewed nature of this in terms of a few startups in a few sectors getting the majority of the funding. And this actually leads me to my next question here, which is, so like you mentioned, this is becoming very skewed. So what sectors are you really seeing which are getting a huge boon from this? Now we understand that naturally there are sectors like the travel industry and F&B and more retail outlets which have been hit and impacted really badly in this. But of course there are, I mean, we all read about Zoom, but ignoring Zoom also, but there are many startups which are enabling businesses to go online and more SaaS startups especially, which are really getting a boon from this. But in your opinion, which sectors do you see as being benefited the most as a result of COVID? And also, do you see the boon that they are getting right now in terms of the increase in growth and explosion of growth? Do you see that as sustainable over the long run, or do you expect that to also taper off in the next few quarters?
Okay, good question, Nasser. I will answer this, from ANOVA's experience as well as what I'm seeing. I think the edutech segment is getting a lot of traction. Other than the educate segment, clearly, it is the healthcare, the digital entertainment, because everybody speaks about, Netflix or the other OTT platforms, that we're looking at, the online delivery on the grocery and the, the medicines. So therefore, the FMCG, pharma, they are getting a lot of traction. I also see that the gig economy, the freelancing, even that is, getting a lot of traction during these times. I hear stock investment is again something, that is, being widely, resorted to. Insurance segment, the gaming segment. So these are some of, segments, where I'm seeing a lot of traction and opportunities that, even ANOVA is getting. So it's the digital, medium, which is your online education, the online delivery, the digital entertainment, the stock market investment from a digital, medium, the digital way to get your insurance, the gaming, which is again, from an app. I think these are some of the segments that are getting a lot of traction. But let's not forget FMCG, the hardcore healthcare, the pharma, even, these are at the moment, getting a lot of traction. I also like the second part of the question that you asked about the sustainability. Okay, now let's understand from an investor's perspective. I think investors will always look to invest in the current situation of where there are businesses which are getting into remote management. So I guess, the likes of VCs, who want to fund businesses, I think if there is any remote management offerings, I think that will be exciting from a longevity perspective. And if any, because you said SaaS, so if there's any software or IT companies, that are providing improved technological infrastructure for efficient, work from home services, I think that again, is a very interesting area. As I said, these streaming apps like Netflix, Amazon Prime, Hotstar, and even Z, I think all this OTT segment, is going to be on for quite some time. So I believe, that is going to be sustainable. EduTech to me is going to be sustainable, though there are a lot of hue and cry in terms of, the way, it is being administered at the moment because children are finding it difficult. But I guess it's still, there to stay for a decent time. And in my personal view, I would still bet on healthcare, pharma, e-commerce, logistics, FMCG, because these are essential. These are necessary. And therefore, sustainability, has to be there, and investors, would love to invest in them.
Fair. And I think one of the sectors you mentioned is something I find really interesting, which is gaming. So especially, I think, even before COVID, especially with how with the increasing penetration of smartphones now, so there's a recent report which said that there are over 500 million smartphone users in India, and this is only going to go up. And with the penetration of Geo as an example, but more importantly, data being available and democratized for even tier 2, tier 3, and more parts of India, I think they've taken gaming to a whole new level. And of course, with COVID, that's just accelerated it to a completely different level. But great. So
because you said that, I will also add, because you spoke about gaming, there are a lot of other companies, SaaS model, they're getting into security. Because if you start using games or let's say other apps, parents are concerned about some of the security aspects, and therefore I think what is interesting now is there are companies which are emerging from a safety security angle from a technology side, and I think even those segments can see much more investments coming.
True. Great point actually. So security and cybersecurity especially is seeing true. Now, Shekhar, so I just wanted to understand, so you already mentioned sort of how you are pretty much sector agnostic in terms of your investing philosophy, but can you give like a broader perspective on your investment thesis, and you speaking as an angel investor yourself, what would you say are like the key metrics that an angel investor would look for in an early stage startup?
Nesar, I've had the benefit of investment banking because, my last stint as an employee, there was a lot of, investment banking, areas, that I was involved in. And that gave me the confidence to start my own business as an investment banker. So over a, period of time, I have, come up with a way to evaluate what I call it as SCREAM as an acronym, SCREAM, which means, there is an entrepreneur or a founder who is screaming for money, to an angel investor, or let's say an investor. And where did I get motivated? I watched somewhere this movie Scream, it's actually a bit scary, but then I just realized, that it was also comical, which means if somebody, is wanting to have something, there is a methodology, which has gone behind. And therefore, let me quickly tell you, what the Scream represents. So S stands for scalability. So when I say scalability, what I'm actually looking for as an angel investor is, does the entrepreneur or the founder have a greater understanding of the market size? So when I speak about the market size, a lot of people speak about the TAM, which is the target addressable market. Then they speak about SAM, which is the serviceable addressable market. Then they say the SOM, which is the serviceable obtainable market. But in my view, what I'm looking at is, when it comes to the SOM, are they confident in terms of servicing the market? So my questions or my investment thesis always revolves around what is the confidence level, because otherwise it's so easy, to put in Excel, putting the target market and then put some percentages and say, this is what is your market share and therefore this is what you will do. I'm not interested in that. I'm trying to see, what is the confidence level to service. And I've also realized that when we speak about a market share, it's not just about penetration. I think the cute thing is also about understanding how do I capture the market share from the other players. So this is, the first aspect of scalability, which I look at. The second aspect is capable team. So when I speak about capable team, definitely I'm looking at the skill set. But in addition to the skill set, what actually excites me is the cohesiveness that I see among the co-founders, or let's say if there's only a one founder, between the founder and the next level, the second line of command. What is sort of cohesiveness? What I'm saying is that when I see mutual respect among people, that excites me, because to me that truly determines the capability and the aspiration of the entire business. Because to me, an entrepreneur or founder is a leader. So how does he inspire? The third is resilience, the word resilience, and I am using this word resilience from the perspective of how does an entrepreneur, he is able to appreciate the competition. I have had conversations, where entrepreneurs tell me there is no competition. Now, clearly, that is something that is completely unagreeable, right? So there is competition, but how much they appreciate. They may see an unfair advantage, which is fine, but yet, they need to, sort of, understand that how do they map themselves against the competitors. The second aspect to the resilience is how do they exhibit their emotional balance when they're facing the ups and downs. How resilient they are, when situation is not in their favor. Now I'm saying this because this tells me what is the true integrity levels, of the entrepreneurs of the team. And I truly, love it, because that tells me, that the high level of integrity also means there is a combined sense of purpose to the business. And I just cherish that. So that's resilience. The fourth is energy. To me, that's the X factor, because energy is contagious. You see a team, you see founding, team with a lot of energy that just peps up, the whole atmosphere. The next one is anticipating success in that screen. And this is, something which is very closer to my heart, because this factor purely demonstrates the winning attitude of the founder or the entrepreneur. How is he, expecting himself to win? Because we all know entrepreneurship is never easy. The journey is always, full of challenges. And therefore, when I say anticipating success, I think what is important for me is the business setting up realistic goals? Is the business right structured to seek investment? So those are the things, as an angel investor, I look at. And finally, metrics. That's my big time favorite, because I'm a finance guy, a numbers guy. So when I speak about metrics, I'm speaking about how do they track the performance, how they focus on the milestones, because these are of paramount importance in any business. And for a successful business, one can never compromise on this. So that's the screen, scalability. And then you come to the capable team. Then it's about the resilience. Then it's about the energy, about anticipating success. And finally, the
Great.
This is how I've been evaluating.
So just one thing, I think an observation here is that most of what you focus on right now, and similarly what angel investors usually focus on, is usually on the quality or they're more focused on the team right now, on the founding team, rather than the actual business. So, I mean, the quality of team determines the quality of the outcome. And people talk about product market fit, but I think especially at the angel investment stage, it's more about founder market fit. And that is something that's really highlighted in what you mentioned also. And just to expand upon your last point there, Shekhar, about metrics. So if you could go into a little more detail on what are the key metrics that an early stage founder should look at, and also especially right now, during COVID and how it's impacted their runways and everything. What do you think are the key metrics that any founder should focus on?
I think given the current times, which is extremely challenging, I think the first most important metric is the cash runway. So I think what is important is, how much, do I maximize? How much, do I extend my cash runway? That is of paramount importance. So if, let's say, an entrepreneur or a founder is wanting to pitch to an angel or a VC, I think in their business plan, they should also, sort of indicate what is the cash runway after raising that money is going to last. And I guess, I'll be very excited if they also indicate what is the burn rate, their overall cost, and therefore the net burn, because that clearly indicates as metrics how long the money is going to last and how well they are managing. What I'm trying to tell here is, if an entrepreneur can focus on the unit economics and therefore the profitability, I think that is absolutely exciting, for an investor to look at. And I guess this needs to be done, whether it's COVID or no COVID situation. I guess unit economics is of absolutely greater importance. And therefore, one needs to understand what is the customer life cycle, what is the cost of acquiring a customer. All this, becomes, very, very relevant. Now, I want to, share something which is my own experience of having, met so many entrepreneurs. Entrepreneurs should hold themselves accountable to these metrics. Now, I've just given 4 or 5 metrics. I think each business can limit themselves, to those 3 or 4 which are relevant to them. It's not about a host of, 10, 11 metrics. Those 3 or 4 which matter the most, they should hold themselves accountable. They need to be data driven. I mean, you must have heard, right? Data is the new oil. That's what they say. Now, these may appearing as boring stuff, but trust me, how to measure your progress, how to measure your milestone, how to prioritize your work. Oh, trust me, these are all the keys to success, because these things are what, I discuss with my team a lot. Because as investment bankers, there is equal pressure on us in terms of how do you guide the entrepreneurs, the founders. And I tell the founders, very openly, if they don't know which metric would change their organization's behavior, they aren't data driven. And I use this phrase, very commonly with my team, but in different forms. I used to tell them, that if you torture data long enough, it will confess to anything. I used to tell them, can you drill deeper? I used to tell them, can you, do slicing and dicing? And I've got one of my team members who's absolutely great. I'm more happy to share his name also. His name is Govind. He's my co-director. And he's too good in slicing and dicing data. And I'm seeing, that the other team members are also, sort of, getting to that. What I'm trying to convey is that when it comes to metrics, it's not just Namke metrics. It's metrics that is relevant for the business. Clearly, at the moment, cash runway is of paramount importance. One needs to understand the burn rate and therefore the net burn. But what is equally important is, the business needs to find, if there's a churn rate, they need to look at the churn rate. If there is other metrics, that is relevant in terms of working capital, they need to look at the working capital. But I think it's very, very specific to business. But at the moment, cash is the king, and therefore everybody needs to focus on that.
True, and I think one of the metrics which you highlighted, which was actually highlighted as well by COVID-19, is unit economics, because I think we all witnessed this huge phase in which we saw this really grow at all costs sort of approach towards startups, wherein they ignore the fundamentals of the business. But I think now they've been forced to purely look into unit economics and the actual fundamentals of the business before they actually look at scaling. So we looked at startups trying to scale before they even achieved, before they even got their unit economics and their foundations in place. So I think that's like a key metric that's being touted right 100%. Now.
Yeah, absolutely.
So, Shekhar, I'm sure, being an angel investor yourself, you receive like hundreds of pitch decks every month. So, and it also must be exhausting for you to evaluate all of these, and I'm sure it's not an easy task. So, in your opinion, when you get these pitch decks from a startup, what would you say are the essentials that a startup should include in that pitch deck so that it's not just cluttered with fluff and the startups understand and value the time that an investor gives while going through their pitch deck? So what would you say are the essentials of a pitch deck that a startup would send to an investor?
Nesar, you're asking a question which is my bread and butter. Okay. So, we have formulated, 11 must slides. Okay. I'm not saying restrict to 11, but I'll discuss, what are the key points, of those 11 slides. And the whole idea, about these 11 slides is to ensure that, you're able to capture what an investor usually looks at. So this has come out of experience of running a business, of having, been in employment and understood how you look at, various information memorandum, pitch decks, investment memorandums, confidential information memorandum. There are various terms to this. And of course, as ANOVA, I know what you're looking at, as well as the angel investor, what you look at. So if you look at the 11 slides, the first slide has to be about what is your business positioning statement. What I mean by this is, what is the problem you're seeing? And therefore, what solution are you offering? Are you clear about the problem? So what I call as problem solution fit. We always speak about, the product market fit. I'm speaking about problem solution fit. So that is the first important slide that I'm looking at, whether somebody has truly understood what is the problem, and therefore the solution is not just a me too. There is a value proposition and it can solve. The second is clearly the market, because if you don't have customers, I mean, how do you run the business? And therefore, when we speak about the market, I'm looking at what the entrepreneur has done to ensure enough on the validation so that there is enough confidence, that they will be able to convert those validations into actual customers. So it's about, even doing an MVP or, even doing a test marketing to ensure, that they're absolutely comfortable about gaining that market. That's why, when I said there is a TAM, SAM, SOM, I'm more particular about your confidence in actually being in that market, in reaching that market, getting the business. So that's the second one, which is the market. And I'm speaking essentially about how do you get the customers in that specific market that you're looking at. The third is my favorite because it's competition and competitiveness, and therefore your competition positioning. What I mean by that is, what are your defenses? What is it, that you're saying that is a barrier entry, for the others? So that is something that we need to hear as investors. And clearly, that also demonstrates, the capability of the entrepreneur or the founder in terms of their own belief on their business model. How, they're able to get even the team into their business, how, they're able to build the ecosystem. I think this slide, gives a lot more confidence. The next is about the actual solution, which means, can we speak more about the solution? If it is a product, what is the core technology? What is the architecture? How do you protect that technology? If it is a service, how do you offer the service? How do you ensure, that the service is seamless? So the solution part has to be expanded. The next is about your marketing plan, your sales plan, your support plan, which means, do you have a clear go-to-the-market strategy? Do you have a channel strategy? What skill sets do you have within the team, or what skill set are you looking outside to ensure that, you're able to garner the sales? You're able to do the marketing, effectively, because end of the day, sales and marketing should lead to customer base. I've seen a lot of businesses, which do the free POCs. And trust me, in the Indian environment, the free POCs never get converted into actual paid POCs, unlike the Western world. And sometimes, that concerns me. So therefore, I'm more looking in terms of understanding, do their sales support strategy actually convert into customers? What is the skill set to convert? The next is interesting. It's the actual business strategy, which means we're speaking about the plan, the launch timing, the other milestones, and even in terms of, ensuring that what they're thinking as a larger picture, the magic of thinking big, where are they heading? The next is extremely important, management. We all spoke about this, and I think quality of the management speaks a lot, in terms of any fundraise exercise. And it is not just about a relevant experience. In fact, sometimes, when they get in a conversation, I'm more than happy for them to even share some of, the not so successes that they have seen, because that shows the authenticity. I just love it. Because I think, none of us, have succeeded in the first go, right? We all, make it a try, and then succeed. So there's nothing wrong. I mean, take Thomas Alva Edison. How many times, he would have done that? So I think every failure is one step closer to success. I'm happy to hear that as management. The next is my favorite area, which is the financial projections, which means I'm looking at a spreadsheet. So every pitch deck should be supported by a spreadsheet. Now you will say, I don't see that in many, entrepreneurs, but in my case, I'm very, very insistent on that. I want it because the spreadsheet tells me, is it bottom up or is it just a top down, approach? And the bottom up tells me, how closely the business has monitored in terms of converting the opportunities into sales, and therefore the profitability, and therefore the working capital, and therefore the quality of, the net worth, that the business wants to show. The next is the funding that they're looking at, which means I'm looking at the precise amount, what is the use of funds, and have they also, done enough study to explain how that application is going to be. Then is the milestones. What I mean by milestones is, with this fund, what is going to happen? When is the next fundraise? And let's say they haven't, there is no break even at the moment. When are they going to, have the break even? I want to look at all those. That's why I said, if the spreadsheet is there, it helps an investor to evaluate themselves. And finally, I want them to tell us on the exit strategy. So is it an IPO? Is it a trade sale? Is it the next round, or 2 rounds later? So the way I've structured these 11 slides is, the first 3 which is about the business positioning, the market, the competition. I call that as a market. The actual solution, which needs to be explained, the marketing, the sales, support, business strategy, I call it as a model, business model. The management is management. And of course, the financial projections, the funding that they're looking at, what is a milestone, the exit strategy, I call that as momentum. I call that as, traction, momentum. So I'm using those words, market, model, management, momentum, which are the 4 M's. So in my mind, as I'm reviewing a deck, I'm looking at, have I seen these 4 M's for myself? And that gives me a greater confidence whenever I look at a pitch deck.
Great. And I just want to sort of needle into one particular point that you mentioned here. And this was regarding especially SaaS startups and enterprise solutions, wherein you mentioned that so a lot of these companies do free pilots and free POCs, but it usually doesn't materialize. So this is slightly, I'm slightly digressing from the pitch deck essentials, but in terms of any new up and coming SaaS startups or enterprise solutions here, do you suggest that they, the strategy that a lot of them are taking right now is to focus on India first and try to get some traction, and then look at the Western world as the primary revenue source? But do you think India should directly begin, build from India and sell to the world? Or do you still suggest the whole start with India, do POCs, validate your product, and then go abroad to sell? So what are your thoughts on that?
This is a tough one, Nasir. I'll say it is a tough one, because if you go abroad, and let's understand what is abroad. I'm not saying, abroad means even Southeast Asia. I don't think, it even happens there in a big way in terms of paid POCs. I'm speaking essentially about, the Western, world, which is, the US, and the other parts. So I think it also depends on how well the entrepreneur is able to explain about the product benefits to the user. So therefore, let's rephrase this whole objective of free POCs. I think somewhere the freemium model has to work. You give certain benefits and then say that if you want the next level of benefit, there is a price to pay, because end of the day you are an entrepreneur, and everybody understands that entrepreneurship journey is not easy. For MSMEs, if the government is coming up with schemes to support them, let's just understand, that the entrepreneur community is looking to be supported. Why, Gilda360 is doing this? Why do you have mentors? Why are you building the ecosystem? So I guess the collective voice and noise has to be saying that, let's get in a model where the entrepreneurs are also having that, assertiveness to say that at a certain level, they will demonstrate what their product offering is. But at the next level, it needs to be converted at a certain price point. And I think some of the customers, that have come to us have done this. And I'm giving this more from the ideas, that I've seen. It's not as if, it's my own idea. I'm seeing that it's happening, but I wish it happened in a much more prevalent level.
Got it. Fair. Completely understand. Now, again, just slightly going back to the pitch deck and how entrepreneurs have to position themselves. So, Shekhar, I'm sure you'll agree with me that, you'll come across many startups. So like, okay, I have all this in place, but how do I actually reach out to these investors? And unless I have a connection, do I need a connection to reach out to these guys? Or is there any particular avenue? And you mentioned you're part of many platforms such as OneCrowd, Let's Venture, and so on. So as an up-and-coming entrepreneur, or as someone who already who's looking to raise funds for their business, what would you say should be the primary channels that they look at while approaching investors, especially for their first couple of rounds? And how would you suggest that they reach out to investors here?
Thank you, Nasir, for raising that question, because it's a very, very relevant question, and I guess I am experiencing it myself. So let me share my experience. Before this call started, I was telling you, that I'm absolutely sort of short of time. That's because you'll be surprised. On the other side, there are many presentations that we are going through as investors. So let me share the names of platforms which are absolutely active and where I'm also involved. So one is Inflection Point Ventures, IPV. Second is Venture Catalyst, absolutely active. Chennai Angels, OneCrowd, Let's Venture. These are extremely active, and I'm part of all this. So I'm able to tell you, with much more confidence, that, a lot of, transactions are happening, a lot of, presentations are being made, and trust me, even investments are happening. I told you, in the beginning that 2020, that is this year, 5 of my investments, they're all post-COVID. And these are all, via all these platforms, which is again very active. Let's not forget, 100x.vc. And I think, entrepreneurs, founders should reach out to 100x.vc and, at least, pitch and see, what is the sort of feedback they are getting. You should reach out to 50K Ventures. And if you look at the other angel platform, there is, Rajasthan Angel, network. There is Hyderabad Angels. There is Lead Angels. What I'm saying, Nesar, is that there is no dearth of platforms. And it's not at all difficult reaching these, guys. I mean, let me, say absolutely, with a lot of assurance to the entrepreneurs, reach out through me also. I'll be more than happy, to connect them, share the deck, with my connects out there, see what is the feedback, these, guys, need to get. What I'm saying is that we got to be brave at this moment. Never shy away, from raising funds, because COVID or no COVID, trust me, an entrepreneur's life, is always about raising the next money, next money, next money. The vitamin M has to, continuously, be there. So my request is, is that, entrepreneurs need to be much more aggressive to reach out, to various platforms and raise the initial money. I agree when it comes to the next level. Let's say a Series A, yes, it may become difficult. I'll tell you the reason why. Most of, the VCs which are at that level, they're more focused in looking at their existing portfolio. They're not keen in terms of, looking at new portfolios unless something is exceptional. Now, it's very difficult to even define exceptional. And the other aspect is that though they are sitting on a lot of money, some of them have raised money very recently. Though they're sitting on a lot of money, I don't know, for some reason, there is this fear factor. I think we're all, human beings, and therefore there's a fear factor. So what I'm saying is that as entrepreneurs or founders, if you're still looking to raise a Series A, you should never shy away. You should still write to them. You should look at, which are the, funds which have been raised recently, probably, in the latter half of 2019, so that that they're sitting on funds, dry powder. So you should look at them. And probably even Sequoia has got Surge. One should, even apply to Surge, because Surge is doing an absolutely, a fantastic job in terms of helping the ecosystem, the startup community. So what I'm saying is, I think there are a lot of ways by which, one can look at funding. And the recent initiative by the venture capital, firms, which is called as ACT, which is a COVID scheme. I think even, the Action COVID, scheme should also be sort of, utilized by the relevant startups. If they are in a healthcare space, if they're doing something on the COVID side, I think there is a grant, that is waiting for them. Now, the question is, will everybody be eligible? I think one needs to give it a good try. If you give a good try, probably you are.
True. And one of the, just to highlight one point that you made here, that even investors are, let's call it time poor. So we do say time is money, right? So like you mentioned, you do get a lot of decks coming in, and also a few of the funds that you mentioned, like Sequoia, who have started the whole Surge program. It shows the interest in even the larger funds in participating in the early stage of startups.
Well,
so that's a really good sign. But again, just to sort of focus on the point of time here. So let's say an entrepreneur just has a couple of minutes to pitch to an angel. So we've seen a lot of these pitch competitions and demo days and things like that, in which an entrepreneur is usually limited to about a minute and 90 seconds to about 2 minutes or so. So what tips would you give them to sort of best utilize that 2-minute period in capturing an investor's interest?
Okay, Nathan, my answer will not be in 2 minutes. So you have to give me some time, to explain, this. Okay, so again, an interesting question. So let's say they need to pitch in 2 minutes their idea. In the current times, the first point, that I would be very keen to see from the entrepreneurs or founders is, what have they done to pivot or iterate during current times? Because during current times, one needs to look at the business model much more closely, much more deeply. Startups will have to innovate if they need to sustain. I'll give you a classic example, Make My Trip, which is only known, for booking the flights and the travel, the hotel. I mean, even they have entered the food delivery market. So they have pivoted, they're looking at, I'm just giving one example. Let's also look at the other example, which is very different, telemedicine. I think until March 23rd, nobody would have expected the government to give clearance to telemedicine. And at least I know one client of mine, who is absolutely joyous because telemedicine is helping him to be more productive, on the healthcare side, ensure his team is productive, and of course, even revenue comes in. So I think the very important point that I'm making here is that the vast majority of startups fail, not because they couldn't build a product. They're all intelligent. But I think the point is because no one wanted the product. And therefore, what I'm trying to say here is that they need to pivot, they need to iterate. And therefore, in this 2 minutes presentation, if they can also share, their journey in terms of when they interact with the customers, what sort of conversations are they having? So instead of, saying, here's what I've got to get the, deal from the customer, can they also ask this question, how can we help you get through this situation? Because this situation is unknown. There's completely, unknown elements. So how can I help, at this moment? So what I'm saying is that, can they lead with empathy and not with competence? And I think that will be very exciting for investors. In those 2 minutes, if they can bring that, that'll be exciting. Now I'm saying this because KYC, which is so important in banking, knowing your customer, trust me, knowing your customer will set apart the post-COVID business winners from the losers and the also-rans. It's very important to go deeper and understand your customer and look at, the actual reality of a customer, because we have faced as iBankers. The customers are always looking for value. And the value actually comes only when you meet their needs, you understand their needs. So merely just by focusing on what value they're looking for, if you meet them, trust me, the revenues and profits automatically take care of. So the first point I'm saying, is that how do they, rephrase all this to ensure that they're telling the investor how well they've pivoted, how well they've iterated to ensure that the focus is largely on the customer, because that shows longevity of what the business is going to have. Probably repeat business, probably, somebody, is going to be a goodwill, going to be an ambassador. The second point I want to raise is very, very important when you do this 2 minutes pitch. I think entrepreneurs, founders during the current times, they need to revisit their goals, their targets, big time. Just revisit. And I'm saying this because founders need to set achievable timeframes for the goals and the targets they're looking to achieve. Because let's understand, COVID is uncertainty. COVID is unpredictable. COVID is ambiguity. I mean, we all use this word VUCA, right? Volatile, uncertain, complex, ambiguous. I think all the 4 letters are hitting at the same time. No wonder it's called as, a black swan. What I'm saying is that, message to entrepreneurs is don't be hard on yourself. Don't be tough on, the targets that you want to set. Don't push yourself too much on the targets during these uncertain times. You've got to be pragmatic. You've got to be cognizant of the situation that we are in. And I'm saying this because even ambitious goals can become achievable goals in achievable time frame. But also understand that achievable goals can become ambitious goals in ambitious time frame. I'm repeating this again because my worry is most entrepreneurs that I've seen, in the name of magic of thinking big, they want to speak about bigger targets. And trust me, when we are reviewing the deck, we are perplexed. So my message to the entrepreneurs is don't push yourself so hard. Don't be hard on yourself. Be pragmatic. And the point that I'm relating to this is that you got to demonstrate fiscal responsibility. Let's just not leave that to Dr. Nirmala Sitharaman. Demonstrate your fiscal responsibility. Can you maximize, extend the cash runway? Can you trim the fat? Can you optimize on the cost? Those are the things that we're looking at. And my third point is very interesting. In the 2 minutes that you said, of course, I'm not taking 2 minutes, but I need to elaborate to explain to you what I'm saying. Today's moment, today's times, trust me, the valuation has got a hit. So if the entrepreneur or founder is raising money, they need to be pragmatic about the valuation. I'm going to borrow a very cute statement from Mark Cuban. And Mark Cuban, says owning 60% of watermelon is better than 100% of a grape. So when it comes to the valuation, I think the founders and entrepreneurs, they should not be looking at a bigger valuation so that they can hold, a bigger stake now. Now is the time to get the money. Money is in scarcity at the moment. And you got to be cute. I'll repeat that statement again. This is what Mark Cuban said. Owning 60% of watermelon is better than 100% of a grape. And I think that's the smartness, that I'm looking at. And somehow, if the entrepreneurs, founders can bring this in the 2 minutes. One, how have they iterated? How have they pivoted? How do they understand the customers? Second, extremely important is to, do I have a goal which I believe I can achieve? We are not discussing the stretch goals at the moment. We are discussing about achievable goals. And the third, which is very important, is on the valuation. Am I being pragmatic?
Completely agree, and especially echo your point regarding the pragmatism. So I'm sure even you come across many startups wherein you might see value in what they're doing, but when you go to their valuation, then you're just like, I mean,
it's crazy sometimes.
It raises some real concerns, and also with how they estimate market size and everything, you have to be pragmatic everywhere in the starting. So
I'll just add a statement here because we are investment bankers. I told a colleague of mine, his name is Praveen, to speak to one of the startups to see whether we can look at the valuation from a much more thematic angle as well as a pragmatic angle. And it took a lot of cajoling even to explain to the entrepreneur why we are discussing all this, because fundraise at the moment is tough if your valuation is unbelievable, and therefore the pragmatism is very relevant.
True. Yeah, so Shekhar, I think you've covered a lot of important topics in this webinar now. So as a sort of final note, what are like the key pieces of advices or key pointers that you would like to give to entrepreneurs right now who are, of course, facing the situation, and especially entrepreneurs who are looking to raise funds right now? So what would be a final point that you would leave as a takeaway here?
So I would like to give 3 messages. Okay. First is I'm going to start by saying, when it comes to the fundraise world, entrepreneurs, founders, please understand, fundraising is an extreme sport. So what is an extreme sport? There is a high risk, there's a high speed. That's what it is all about. So the most important point that I want to convey is that learning to embrace and facing rejection is one of the best things that entrepreneurs can do. Please understand, that the rejection is only a feedback. Take it, with that, that absolute right spirit. Remember, when you use the word fundraising, because that's a topic that we're discussing, there are 2 I's there. And I always used to say, that the 2 I's should actually represent, number 1, inspiration, number 2, innovation. Unfortunately, I've seen some of the entrepreneurs, more rather than getting inspired, they get irritated. Some of them, even ask me because they come to me and say, fundraise, it's not happening in time. My business is not shaping up. My revenues are down. I'm not able to cut this cost. I think entrepreneurs need to be, beyond. They need to understand that they need to be an inspiration to others, because not everybody, is gifted with this word called entrepreneur. I think it's a huge responsibility. And the second is innovation. So it can't be an imitation. So it has to be inspiration. It cannot be irritation. It has to be an innovation. It cannot be an imitation, because raising money is not the key. Trust me, guys. It'll come. And trust me, once you have raised the money, you will look at the next raise. But I tell you what is important. What you become in this process, that is the key. There's an amazing statement which I always repeat to myself. The greatest value in life is not what you get. The greatest value in life is what you become. And I think that is what even entrepreneurship is teaching me. What do I become as I run my business? So that's the first thing that I would like to share. The second is very important: action. What I mean by action is important. Execution is important. It is not in the power of ideas that success lies. It is always in the power of execution. How well are you executing? Are you putting your, not just the passion, are you putting your effort also? When somebody tells me I'm so passionate, I ask the next question, what's the effort are you putting? Because execution is very, very important. Trust me, this is an absolute truth, Nasser. Idea never fails. Every idea is brilliant. Idea never fails. The next statement is very important, what I'm going to make. The business model to an idea, that only fails. Which means as an entrepreneur or founder, the only thing I need to do is, am I challenging my business model enough? So more than the idea, how the idea is presented, that makes a difference. And that is why I urge the entrepreneurs, the founders, to have mentors, advisors, run through them, so that they're able to give them, the right piece of advice, right piece of, wisdom and the guidance. The third I want to add is, and this is my, very important aspect whenever I judge an entrepreneur, I think to me an entrepreneur is a leader. I'm looking at the leadership quotient. It's just not the domain expertise. I'm looking at the attitude. I'm looking at how the person is leading, how the person is inspiring. That's why, in fundraising, I use the word inspire and innovation. Innovation is about domain. Inspiration is about the attitude of the person. Because leadership is about making a conscious choice to be your best. Are you making a conscious choice to be your best? Leadership is about consistently being the best person you can be. The question is, are you becoming the best person you want to be? Why? Because the founders who get funded, they are above the crowd, and that's why they are investable. We are looking at those founders. We are looking at those entrepreneurs. I'll share a quick anecdote. I'll be short. It's about a disciple and a monk. So the disciple actually questions the monk, and he says, why all precious things in this world are in scarcity? Why are they in undersupply or shortage? For example, drinking water. That's very less, right? 75% of this earth is full of water, but drinking water is less. Then look at oxygen. The air that we need to breathe is less. So he asked this question, why all precious things in this world are in scarcity? Now look at the reply of the monk. The monk said, it is actually the other way. The monk said, because they are in scarcity, they are precious. So the message to the entrepreneurs is how you as a founding team can be above the crowd, one notch up. How can you be in scarcity so that we guys get FOMO? As investors, we get FOMO. What is FOMO? Fear of missing out. We don't want to miss out on you. So if you believe that you go into that scarcity zone, trust me, we will be after you. Because investors, they are tossed between these two kinds of fears, including me. One is fear of investing in a startup because the thought says, will it fail? Will it go bust? And the other fear is fear of missing out, because if a startup takes off nicely. So how do you ensure that you're, tossing up us towards the direction of FOMO, which is fear of missing out? And if I have to, conclude, in all these three, I think we all need to understand that every big business started small. So why, are we even worried about what stage are we? Everybody started small. Nobody just became big like that. So I guess it's the resilience, it's the passion plus effort, it's the attitude, it's the leadership quality. It's about, the greater understanding, in terms of how, I'm looking at the execution rather than just merely the idea. And am I inspiring not just to myself, but also to the team and therefore the outside world? Am I being innovative? I think these are the sort of things that I would expect from an entrepreneur, also from myself, because all this is hard learnings, Nesa. This is not something that comes just like that. It is all hard learnings. In the journey of 7 years of ANOVA, we also learned so many things.
True, absolutely. And I think we've all heard the saying, a journey of 1,000 steps also begins with, journey of 1,000 miles begins with.
Exactly.
So I think it's very apt for entrepreneurship as well. So, I just want to thank you very much, Shekhar, because you've really taken out a big chunk of your time, especially on a busy weekday. And I think you've shared some great insights for all our listeners here. And just want to thank everyone who's tuned in for watching, and hopefully we've been able to add some value to you. And just to conclude here, so if you are interested in speaking to Shekhar directly, you can always connect with him at Gilda360.com. The link will be shared in the bio soon. So anytime anyone who wants to book a session, feel free to visit Gilda360. So Shekhar, thank you so much for your time, and it was a pleasure to have you with us.
Thank you so much, Nesa. Let me also thank Niranjan, who got in touch with me. Let me, give a big thanks to Gilda360 also, and to all the participants out here. Have a fabulous time. Whatever it is, let's be resilient. Thank you, guys. Thank you.
Take care.
Cheers. Cheers, and bye. Bye.